Hi everyone, it's Friday. Maybe not a happy Friday for everyone, but it is Friday. And the big news of the day, of the past 2 days, is the sell-off that we're experiencing because the bull run has been going for months on end, and it seems that a lot of people thought that that's how the markets go, which those with a little bit of experience know is not the truth. So I'm not sure if you received the emails from eToro. They're really great. I'll give you a good breakdown of what has happened through the day and what is to be expected. So indexes yesterday sharply down, in particular the NASDAQ, and that'll be the focus of today's update. Some information about the various sectors. I am quite keen on the UK, by the way, although Brexit is proven to provide some uncertainty, but I think it's a good potential market if the US does continue to sell off. And another thing to watch out for is that the US markets are closed on Monday. And that usually means that there's going to be a sell-off on the Friday because institutional investors and other short-term traders, they don't like to hold their positions over longer weekends because they don't know what news is going to come out, especially during volatile times like we're experiencing and have experienced for the past few years. So there's typically a sell-off the Friday before an American long weekend. Okay, so obviously the NASDAQ rode this massive red candle down yesterday. I was quite happy about this. I've been waiting for something of the like to happen for a while now, and we've just had a fantastic quarter in terms of earnings, much better than anticipated. But a lot of stocks that have grown incredibly were due a bit of a consolidation. I would be very happy if this consolidation happened over the next week or two, and we saw a further 5, maybe even 10% drop in the markets, because I'll look at it in a moment, but things are still way too hot, and I'm uncomfortable getting in the market where we are right now. But things might not go that way, so we will see. All right, so the market opened 1 minute ago, and I envision a very big battle between the bears and the bulls. There are going to be a lot of newer investors that are thinking this is the dip that they want to buy, a major dip, and now is the right time to get in. The more experienced investors will be thinking things are still massively overvalued. The stocks that tend to have risen the most over the past few months really need to cool off a little bit. So I expect those two parties are probably going to be playing out today, and right now I'm not sure who is going to win. Cryptos are also down, so I know that a lot of the crypto fans have this desire to see a decoupling between the traditional markets and the crypto markets, but it has been proven time and time again, at least historically, that the two are highly correlated. And so we've seen a sell-off there too. I'm quite interested in potentially picking up a bit more Ethereum, but that won't be the focus of today's update. So we can see that things are moving quite quickly. So prices are changing. I've ordered this by those that have lost the most, and already part of that picture is updating. And here we see the winners. So things like Tesla trying to fight back after its sell-off yesterday. So just looking a bit at the headlines. So the more experienced investors will probably be reading some of the publications that I am too. So these will reflect the information that they're receiving and maybe the way that they feel. So a lot of executives have been dumping stock massively over the past month. A lot of the leaders and businesses are paid in part by receiving stock within the companies that they run as an incentive to run them well. And after the bull run, they want to take some profit now. So insiders are selling off pretty hard. Not just executives, but also investors are doing the same. Not these investors, but hedge funds, for example, that buy into particular stocks have been taking profits in a pretty big way. So other hot topics in the news. Obviously, there's a race for the White House. I'm not sure how much of a race it is. I've got a feeling that Trump is gonna easily win. Something interesting to note is that Trump will probably do everything in his power to keep the markets rallying going into an election, because a strong economy, as is reflected by the stock market, is part of what he is selling to his base. So historically, also going into elections, there's quite a lot of volatility going into the election. So and the volatility in the US market ripples out into the rest of the market. So be aware of that. Before the markets opened today, the NASDAQ was a touch in the red. I think it was running between -1.5% and -0.3% down. So it looked like it was going to open down, but I guess we'll see in a minute. I'll jump out to the chart and we'll see how it's doing. And then more broadly, so you're going to see news articles that are echoing either the positive or the negative message of the markets, sometimes in the same publication. So stock futures signaling a deepening sell-off in tech, whereas in some places you're going to see established media outlets saying now's the time to get back in. So I would say take the news with a pinch of salt. Again, Reuters is one of my favorite in terms of balanced opinions. So I read quite a lot from Reuters. Again, just getting a highlight of what's going on in the world is important. And then very quickly, just a look at some stocks that I know a lot of people probably know by heart and are some of their favorites. So we saw the NASDAQ selling off, or the NASDAQ 100 selling off up to 5% yesterday. But if you look at some of the constituents, and I've just pulled a few out here. So even though they have sold off, there are many ways to determine whether a company is under or over or fairly valued. Some very simple, some very complex, and they all have their flaws. But in general, a fairly easy way to do so is to look at the price earnings ratio. So Tesla's still got an enormous PE ratio, and just so you know, historically the PE ratio for any business typically comes back to its historical average. Some of these companies have only started making profits recently, so it might not be applicable, but 150 means that people anticipate that Tesla's earnings, their profitability, is going to grow by 154% probably over the next year, which is unlikely. Apple, not as bad, but still fairly high. Microsoft, high. These companies usually run in the 24 range, in terms 20 to 25 range of PE ratios. Solar Edge, Shopify, insanely high. I don't have Zoom on here. Zoom is, I think, in the thousands. AMD is high. This is one company that I don't know if a lot of people know about. It's one of my favorites, but they're not making a profit yet. Nvidia, very high. DocuSign, very high. A lot of them are showing that their EPS might grow quite nicely based on the historical trend, but we'll see. So a lot of the companies that make up the NASDAQ 100 and the NASDAQ are incredibly overheated right now, despite selling off quite heavily yesterday. That doesn't necessarily mean the sell-off will continue now, but at some point those stock prices will come down to a more reasonable level. Yesterday I posted something, and I just wanted to touch on this quickly. So when things did sell off, and I think this was early on in the day, you can see that a lot of the selling was in tech, and it was obviously in the companies that had grown the most, largely, maybe not Slack so much. And you can see that the stocks that were turning green had basically no technology component at all. And this is typical for those of you that have been investing in the market for 1, maybe 2 years or less. There is often a phenomenon called a rotation that occurs, where when a certain basket of assets has grown quite nicely, investors, particularly the professional investors, will take their profits and they'll look for other places that aren't so overvalued, other places to put their money so that they can make more profit and hopefully with less risk. So this started happening yesterday, and when I looked at the charts earlier today, it looked like it was going to continue through the day. But if we take another look now, so again, I guess, yeah, so tech is selling off, nowhere near as hard. Ooh, might be time to pick up some Activision. And then we've got a mix. So I think bulls are pushing Tesla a lot higher. But then we've got a lot of non-tech stocks in here too, banks, travel stocks. So a little bit of that rotation is probably continuing. And I would expect that to be the trend through probably the next quarter, as tech cools off and people put their money more into the stocks that haven't recovered yet at all. A lot of travel stocks are still down 50 to 80%. Right. So in terms of the NASDAQ 100, I did want to get, you can get PE ratios on indexes. It's quite hard to get historical information on the NASDAQ 100. But some people will be terrified that now, you know, we're on the brink of the big one. And I don't think we are. So just to allay those fears a little bit, the markets can easily correct 5 to 15% in a short period of time, especially when there's been a massive bull run. And that doesn't mean that the sky is falling and that the world is coming to an end. And again, using the PE ratio, I don't want to complicate the picture too much. We can see that the NASDAQ 100 is, you know, roughly at 31 for the trailing 12 months. Now, looking at the bubble in the 90s, the dot-com bubble, which I think a lot of people are worried that we might be approaching another similar bubble, PE ratios were hitting around the 200 level, 100 to 200 level. So the valuations haven't been skewed anywhere near that level yet. We've still got another 15 times for the price to increase relative to earnings in order to reach that level of bubble. So we might be making our way towards a bubble, but I think we're probably years away, not even months. Again, this article is just repeating that message. So the PE ratio, obviously flawed in some ways, but a fairly good indication. And I think it hits 200 at the peak of the dot-com boom and bust. This is me doing some research, by the way. So you're seeing effectively the way that I research across the various pieces of information I can find when I'm trying to make a decision about the way the market's going to go. All right, so I've been logged out, but I've told you all of this, so now what can you do about it? So first of all, I would not panic. I don't think this is the big one. I'm quite happy that it sold off 5% yesterday. I would love it if it sold off another 5 to 10% because there are lots of stocks that I want to get back into and make money from. In the meantime, not knowing the timing of exactly when that sell-off might happen, you can see that I have shorts on, for example, the NASDAQ 100. I have also bought a lot of stocks that aren't in technology. So this is biotech, I guess that's still a bit technology, and obviously I have stocks like those that I hold in cruise companies and Marriott, and I'm also holding gold indirectly through an ETF. So I'm hedged for when the market does drop. I'm also diversified so that when money does rotate, I still am making some money, or even though my portfolio is predominantly tech, and I'm holding a large amount of cash. So I'll convert some of my short positions and my gold positions back into cash and buy back in to the market at much better prices when that rotation does happen. So that doesn't mean that my portfolio won't drop at all. It might drop somewhat, but it should drop less than the NASDAQ or the S&P 500, and it means that I have money to buy stocks at much better valuations and benefit from when they rise again. All right, cool. Hope you like that. Don't worry, it'll be okay, and I'll speak to you soon. All right, cheers, bye.